the weekly grocery shop. It used to be a mundane task. Now, for many Australians, it's a source of genuine anxiety. A careful calculation of needs versus ever-increasing costs, often ending in compromise. We all feel it. That moment at the checkout where the total flashes up, and it's 20, 30, even $50 more than it was for the same items not so long ago. It's a collective, national experience. We see the headlines and hear the explanations about global inflation and supply chains. But a nagging question persists, whispered between aisles and discussed over dinner tables. Is this really the full story? Welcome back to the channel. Today, we're taking on the two giants of Australian retail, Coles and Woolworths. Together, these two corporations control over 65% of the nation's grocery market. That's a level of market concentration almost unseen in the developed world. A duopoly that has long been the subject of scrutiny, which has now reached a boiling point. The central question of this video is this: are the soaring prices we're all paying a simple reflection of rising costs, or are we witnessing a form of opportunistic price gouging, protected by a lack of real competition? To find the answer, we have to start at the beginning of the supply chain, long before these products hit the shelves. We have to start with Australia's farmers. For years, farmers have described a massive power imbalance. They are price takers, not price makers, forced to accept the terms set by the two major buyers. Let's take the humble potato. A farmer might invest months of work and thousands of dollars in water, fuel, and labor, only to be offered a price per kilo that barely covers their costs. We've heard stories at recent Senate inquiries of entire crops being rejected for tiny cosmetic imperfections, leaving farmers with a devastating financial loss. That same imperfect produce often ends up being bought by the supermarkets for a tiny fraction of the price, to be processed into other products, while the farmer bears the loss. This immense pressure forces many smaller family farms out of business, leading to more corporate agriculture and less diversity in our food system. So while the farmer is squeezed, let's look at the other end. That same potato, bought for cents per kilo, is washed, bagged, and put on a brightly lit shelf for several dollars a kilo. The supermarkets argue this markup covers transport, storage, wages, and marketing, and it does. But the question is, does it justify the sheer scale of the price difference? Now let's look at our own experience as consumers. We've all become unwilling detectives, hunting for signs of shrinkflation. The packet of biscuits has one less row. The tub of yogurt has a bigger dimple at the bottom. The block of chocolate is thinner. The size goes down, but the price stays the same, or even increases. It's a stealthy price hike. And what about the illusion of choice? You might see dozens of different brands on the shelf, but many of them, particularly the cheaper home brand labels, are often made in the exact same factory. This lack of genuine brand competition further solidifies the power of the two major players, limiting our options and keeping prices within a narrow, controlled band. Then there are the loyalty programs, everyday rewards, flybys. They promise savings and points, but they are also colossal data harvesting machines. This data gives the duopoly incredible insight into our shopping habits, allowing them to fine-tune their pricing and marketing strategies for maximum profit. The dominance of Coles and Woolworths has also contributed to the decline of local high streets. The local butcher, the baker, the greengrocer. Many have been unable to compete. This reduces community connection and further funnels our grocery spending into the pockets of just two massive corporations. Let's compare internationally. A basket of staple goods in Australia is consistently found to be significantly more expensive than the equivalent in countries with more competitive markets, like Germany, France, and the UK. While factors like geography and population density play a role, critics argue this price difference is clear evidence of a market that is not working effectively for consumers. So, what did the recent Senate inquiries uncover? We saw CEO after CEO sit before politicians, defending their pricing strategies and record profits. They spoke of rising costs, of the millions they'd invested to keep prices down. and of profit margins they claimed were reasonable and internationally comparable. Yet at the same time, these companies were reporting billions of dollars in profits. Woolworths' food division, for instance, has an EBIT, that's earnings before interest and taxes, of over 6%. For a low-margin industry like groceries, many analysts say that is an exceptionally high return, suggesting there is indeed significant room to lower prices. The inquiries also gave a platform to the Australian Competition and Consumer Commission, or ACCC, the nation's corporate watchdog. The ACCC has highlighted that while it can monitor prices, it currently lacks the power to directly punish companies for excessive pricing or price gouging. Its hands are often tied. This has led to widespread calls for new, tougher laws. One of the most radical ideas being debated is divestiture power. This would give the government the power to forcibly break up the duopoly and sell off stores to create new independent competitors, a move that is fiercely resisted by the major parties. More moderate proposals include a mandatory code of conduct with billion-dollar fines for breaches, and new laws that explicitly define and outlaw price gouging. We can also look at the disruptors that already exist. Aldi, and to a lesser extent Costco, have had a noticeable effect on prices in the areas where they operate. However, their market share remains relatively small, and their business model doesn't work everywhere, particularly in smaller regional towns, leaving the duopoly's power base intact. So, what does this all mean for you, the shopper? It means the feeling that you're being taken for a ride is not just in your head. The evidence suggests a complex picture. It's a mix of genuine global inflation combined with a concentrated market that gives two powerful companies the ability to protect and expand their profit margins at our expense. So while we wait for political will to catch up with public anger, what can be done? Being a conscious consumer is a start. Supporting local butchers, bakers, and farmers markets helps keep local businesses alive. Choosing the disruptors when you can, and being vocal about your experiences adds to the pressure for change. Every dollar you spend is a vote for the kind of food system you want. But individual action alone won't solve a systemic problem. Real change requires real political courage to reform competition law and give the watchdog real teeth. The affordability of food, a basic human right, should not be a constant source of anxiety for Australian families. The system can and should be fairer for everyone, from the farmer in the field to the family at the dinner table. What are your experiences with supermarket prices? Have you noticed specific items where the price hikes seem excessive? Share your stories in the comments below. This conversation is vital. Your personal stories are the evidence that politicians and corporations can't ignore. If you found this investigation insightful, please hit the like button and share it with others who are feeling the pinch at the checkout. Subscribe for more deep dives into the economic issues impacting everyday Australians. Thank you for watching. We'll continue to follow these crucial issues and bring you the information you need to navigate the Australian economy.